Time insurance, as it has been since 1689, when the first brokerage was established in a coffee shop close to this site. This is the original rostrum, where a caller would shout information to brokers, and that is the Lutein bell. It comes from a ship called the Lutein that sank, carrying a cargo of gold bullion. Lloyd's paid out for the loss and established its reputation. What's worrying brokers here today isn't gold, it's oil and gas, specifically the oil and gas on tankers in the Persian Gulf, currently sat waiting to know what to do either side of the Straits of Hormuz. They've been sitting there since the Iranian military made threats, but there's another factor, not just their security, their insurance status. The Lloyd's market has something called a joint war committee, which assesses what it calls war-related perils for shipping, and they have expanded the area of what they consider to be high risk in the last few days to include Kuwait, Qatar, a wider area of the Gulf. And that simply means the insurance those ships set out with may no longer apply. So they insist they are insured, but they are having to reassess the risk. Reinsurance will come in due course, and then owners can decide whether to move their ships. For now, they are static, and traffic through the Straits of Hormuz has collapsed. What's going up is the cost, not just of shipping, but almost certainly the cost of insuring these vessels. Premiums will rise. There is an offer from Donald Trump made via social media that an American financial institution will offer insurance, but here they don't know what that means.
The detail of such a scheme hasn't been given to anyone so far as we know, and it will take time to work it out. And the appetite is unknown. Essentially, our market's still writing risks, and there isn't a perception here that there's a need for intervention at this time.
Trump has also promised naval vessels to provide an escort for tankers, even if that could mean oil bound for China being taken there by US military vessels. Some think that might reduce the risk. Others point out it could push up the premium because a naval vessel with a US flag could be a target.
There will be those who think it might increase the target because the Iranians are targeting US military. It's not known how capable they would be against the new drone and missile threats that we're seeing. This is not the same as the 80s. So yes, obviously people would like to see the detail, they'd like to see it happen. If you're a tanker owner, you'd be on the one hand delighted that it's been offered, on the other hand trying to understand whether it does increase the risk or not.
This place once paid out £1 million to the owners of the Titanic within 30 days. Now, mercifully, no vessels have been lost since this war began. We can be pretty certain that prices of oil, of gas, of premiums paid by those shipping them, and ultimately to consumers, they're going up.
The invisible blockade. How one choke point is breaking global trade. I'm Ro for the real shift, and all I ask of you is to roll with me. Now, we've talked about the missiles, we've talked about the warships and the geopolitical chess match, but there is a weapon in the Middle East right now that is far more dangerous to your wallet than any torpedo, and you can't even see it. It isn't a blockade of ships, it isn't a blockade of insurance. Today we are looking at the invisible blockade. We're going to explore how a single drone strike in the Strait of Hormuz can instantly add millions of dollars to the cost of your everyday goods, and why the world's most powerful navies, despite all their firepower, are essentially powerless to stop it. The Strait of Hormuz is only 21 miles wide at its narrowest point, but the economic shockwave it sends out covers the entire planet. If you think this is just about oil, you're missing the higher, the bigger picture. This is about the very foundation of global trade. The math of risk. To understand why your grocery bill or your gas prices spike when tensions rise, you have to understand the war risk premium. In the world of shipping, nothing moves without insurance. A cargo ship is a floating city worth hundreds of millions of dollars, carrying goods worth hundreds of millions more. Your capture is certainly no bank. We'll sell that we'll sail that vessel into a hot zone without coverage. When a single incident happens, a mine, a drone, or a boarded vessel, the insurance hubs in London and Singapore don't just take notice, they react instantly. They reclassify the water. Suddenly, that 21-mile stretch of water isn't just a trade route, it's a listed area. What does that mean for you? It means that the war risk fee can jump from a few $1,000s to over hundreds of thousands of dollars per voyage overnight. And when the risk gets too high, the insurance companies simply stop offering coverage. When the insurance stops, the ships stop. This creates the butterfly effect of global logistics. If a tanker can't get insurance for the strait, it has to reroute. It has to go all the way around the Cape of Good Hope at the tip of Africa. That adds 10 to 14 days to the journey and over $1 million in extra fuel costs per ship. Those millions aren't absorbed by the shipping companies. They are passed directly to you at the checkout counter. The fragile giants. Now, we often view these tensions through a Western lens, but here is the reality. The United States is largely energy independent. The real panic isn't happening in Washington, it's happening in Tokyo, New Delhi, and Beijing. China, India, and Japan are the fragile giants. They rely on the Strait of Hormuz for the vast majority of their energy needs. For these nations, a disruption in the strait isn't just a price hike, it's a national security catastrophe. If the oil stops flowing, the manufacturing hubs, the factories that build your phones, your cars, and your electronics grind to a halt. This is exactly why we are seeing a massive shift in the BRICS nations. They are realizing that their entire economic survival is tethered to a waterway controlled by regional volatility in Western-dominated insurance markets. This tension is forcing the BRICS bloc to accelerate alternative routes, and more importantly, alternative currencies. They are trying to settle oil trades in yuan and rupees to bypass the traditional financial systems. They are looking for a way to trade that doesn't rely on a system that can be switched off by a single insurance adjuster in London. If the straits closes, it's not just no oil, it's no trade for the world's most vital manufacturing hub. The insurance blockade. Wait, it gets crazier. You might ask, why can't the U.S. Navy just protect the ships? Here's the secret that no one is talking about. Geography and finance are now more powerful than military might. The U.S. can keep the water clear of mine. They can shoot down drones. They can patrol a lane 24/7. But the Navy cannot force an insurance company to write a policy. If Lloyd's of London, the heartbeat of the shipping world, decides that the risk of the total loss is too high, they will pull the plug. And if Lloyd's says no, the ships stay docked. It doesn't matter if there are 3 aircraft carriers sitting in the Gulf without the paper contract. That ship is legally, financially paralyzed. This is the invisible blockade. It's a blockade enforced by spreadsheets and risk assessment, not by battle zones. In 2024, An insurance adjuster in a high-rise office has as much power over the global economy as an admiral on a bridge. This shift represents a new era of warfare where the goal isn't necessarily to sink the ship, but to make the ship uninsurable. The Strait closing and call to action. The Strait of Hormuz isn't just a waterway, it's a global economic trigger. And right now, the trigger is being pulled by insurance adjusters in the market speculators, not just generals and insurgents. We are living in a time where the physical security of a trade route is only half the battle. The other half is the financial confidence that keeps the wheels of capitalism turning. When your confidence shakes, the invisible blockade tightens, and we all feel the squeeze. But I want to hear from you. We are seeing a world where geography and finance are colliding in ways we've never seen before. Do you think geography has become more powerful than military might in 2024? Or is it the military the only thing keeping the insurance company at the table? Let me know your thoughts in the comments below. I read them all. And I want to see your take on this economic shift. If found that this breakdown was valuable, make sure to hit the like button and subscribe. We're going to keep pulling back the curtain on the forces that actually run our world. Thanks for watching. I'm Roll, and all I ask for you to do is roll with me.